Thank you so much for that very kind intro. And thank you, Miguel, for joining the event. I think it's your first time, right?
Yes.
Okay, so this is obviously the event in Southern Europe, and we're very, very excited to have you here. So a bit of an intro on Generation. This is really the pioneering fund in sustainable investment in the world, I would say, with 37 billion under management and top quartile, top decile, I would guess, even returns. So fantastic returns while investing in sustainability as well. And also with a very strong culture. We'll talk about that later. We have a team of 100 people, I think, and 13 out of the 18 original people are still in the firm, right? So that's certainly something that we can maybe discuss later, because I guess that purpose-driven strategy also helps retention, right, in the team. But first, we'll start a bit about your background, because I know your story, obviously, but I would love it if you could share with the rest of the audience.
Sure. Well, thank you very much for having me here. And I've fulfilled a dream today, walking onto a stage with a live band. This is much better than investing. So, and I feel like I should be asking you the questions here. You know, you're the best VC in Spain. So, you know, I feel kind of imposter syndrome being interviewed by you here. So, yeah, so a little bit about my background. So I don't come from a traditional kind of finance background. I come from a small town in the south of Spain called Granada. My family, my dad is an academic, my mother is a doctor and a kind of impact person. She set up schools and charities. And what was cool at our dinner table when we were growing up was really social issues, geopolitics, what's happening in the world, healthcare, the environment. So that's what we grew up with. And so I guess when I was older, I really wanted to have an impact position. So I went off to university to study economics. I wanted to go and work for the World Bank. Before that, I spent a year running around Australia with long hair, collecting seeds, planting trees. You know, that was the year after the Rio Earth Summit, 1992. And everybody was just so excited about sustainable development. It was like a kind of boom time. And so I just thought I'd spend a year, you know, doing that. So finished university, and my plan was to go and work at an investment firm for a few years so I could then go on to the World Bank or something like that. And I just got hooked on investing and on analyzing companies. So understanding, you know, what do the founders do, what's the competitive environment, what makes a great business, you know. So I just love that. And to this day, the cycles of greed and fear in the stock market, they're just fascinating things to me. So after about 2 or 3 years, I came across a company called Novo Nordisk. It's a Danish pharmaceutical company. They're one of the pioneers in sustainability. They had this idea called the triple bottom line, which is very similar. This is in the late 90s. It's a very similar idea to stakeholder capitalism, but just phrased in a different way. And there was a woman there called Lisa Kingo, who to this day I consider my mentor, and she really taught me about sustainable business. So fast forward a few years later, and a few kind of failures, and a few learning experiences, and so we set up Generation in 2004, 17 years ago, with the goal being, you know, can we find a portfolio of companies like Novo Nordisk and try and make, you know, a good return for our clients and drive sustainability.
And how easy or difficult was it to find investors for that first
At the start, it was
venture?
really hard.
Because 2004, I mean, now we are all talking about sustainability and ESG, and it's pretty much on everybody's heads. But back in 2004,
yeah, it was super uncool.
a bit nerdy, maybe.
People looked at us with a mixture of pity and sort of delusion.
Yeah.
So it's interesting because the first wave of people that invested in us were the kind of faith-based organizations. There was already an existing ethical investing world. You know, actually going back to the 60s, when the Vietnam War was around, there was a kind of war. People were not investing in companies making armaments. Or during the apartheid, people didn't invest in companies that were involved in South Africa. So there was like a really small niche ethical investing world that was very kind of values-based. So we had a lot of people like church groups, certain foundations. They were the only clients that really believed in us at the start. So the first couple of years, we almost really didn't make it. And then after year 3 or 4, it began to build up. particularly because we started showing good returns, because our idea was always, convince the people that are doubters by showing good returns.
Exactly, because I guess that's a really important factor, right? That you can make investments in companies that fall into the sustainable space while at the same time getting the best returns. And I think that's something that is changing, right, in the last few years, because it always seems that you can't do both.
Yeah.
And your idea and your investment strategy from day one was to get both, no?
That's right. And maybe it's kind of worth defining
Exactly
what
what's
we
sustainable.
think is sustainable.
Uh-huh.
So again, as I said, there's been many definitions, and we make it terrible for people in our world because we have like all these acronyms like ESG or sustainable or triple bottom line. But it boils down to a really simple idea, which is that the value that the business generates for society is greater than it generates for its shareholders. So, the traditional financial analyst will look at a company and they'll just do a discounted cash flow, they'll discount the dividends, they'll figure out what it's worth. So that's kind of one element of value. Another completely different element of value is what does it add to society? Right? What does it add to the environment or otherwise? Health, equality. And this is something that can be measured, but is typically measured by economists or by social policy people, never by investors. Well, at least it used to be never, now not so much the case. So let's take an example. So let's say you've got a tobacco company, it's making a product which kills its clients, it's creating a lot of issues for the healthcare system. The typical financial analyst will just discount the cash flows and value it at that. But obviously it has a massively negative externality, right? The same is the other way around. So let's say you're doing analysis of Moderna right now, or I don't know, any company that's inventing new stuff in healthcare. They've got a massive positive externality to society in form of, just as we all know during the last year in COVID. So we're looking for a big gap between societal value and company value. And this is really important because you're not doing it just to kind of go home and feel nice about yourself. That's not the goal. Society and stock markets are just a giant machine for moving capital in the long term to where society needs it. So if you have a company with this gap, what's going to happen over time, now sometimes it takes years, but society makes capital move to where it's more needed. So those companies that generate the positive externality are therefore going to grow faster than the others and hopefully going to be more profitable. So I think it just creates a kind of massive opportunity, and that's something that we have done and we continue to be focused on.
Great. And what sectors or in your strategy, what are you most excited about at the moment?
Yeah, so I'm excited about a lot, and because we have probably about 50 investment professionals. We look across different types of private equity, public equity. We have a fund in Asia. So I'll share some of the stuff that gets me excited.
Okay.
So it's not necessarily the whole picture.
How much is public, how much is private? Is that public or?
About 33 billion is public.
Public?
And we have
Then
about 5 or 6 in private.
In private?
Yeah.
And it's worldwide, right?
Worldwide. So we invest across the board in all countries.
Okay.
And we're now setting up a sister company which is called Just Climate, which is going to focus purely on the really hard to abate climate sectors, but we haven't really talked too much about that. We'll talk more about that later on in the year. So sectors, first of all, maybe start with the environment, which is my personal passion and lots of people in Generation.
Okay.
And here, we've been investing in this for years. I think there's the kind of typical things that everybody knows about. There's trillions of dollars that need to be mobilized for a sustainable world. Some people say 3 trillion, others say 5 trillion. It's a lot of money that needs to move. So there's going to be a lot of opportunities to move that money. Things like renewables, it's still going on. It's a bit more commoditized these days. Things like transition to electric vehicle, it's more predictable now. It's definitely happening. And it's going to come much faster than people think. And we're seeing that in the numbers right now. Things like energy efficiency of buildings, that's a big area for us. Buildings are really hard because, as Brendan was saying earlier, every building is different. So solutions change. So whether it's the lighting, the lifts, the heating system. We need to retrofit pretty much the entire stock of buildings. So if you look at the European Green New Deal, we renovate about 1% of our real estate every year. We need to renovate like 3, 4, 5%
Okay.
to get to net zero. So there's huge opportunities in that.
Mm-hmm.
So in addition, maybe other areas that are maybe a little bit less obvious. So I think hydrogen is really interesting, particularly for a country like Spain, which I think with hydrogen it can be an energy exporter for the first time in its history, because if you make green hydrogen with a good renewable resource, that can be exported to the rest of Europe. So that's a really exciting, difficult, capital-intensive area, but with some interesting points in the value chain. The grid is another big area. So basically, to become sustainable, you need to electrify everything. Everything. I mean, there's almost nothing that won't be electrified. So I think you probably need about 3 times, some people say 3 times, some people say 5 times, but many more times the capacity to move electrons around the system. And again, that opens up investments in the grid, and it also opens up investment in things related to the grid. Final one, which I think sometimes people find surprising, is sort of agriculture and nature.
Yeah.
So, agriculture and nature feels like renewables felt 20 years ago. It's complex, it's messy, nobody really knows what the solution is, but it's super impactful. So, we lose, deforestation is responsible for about more than between 10 and 20% of our emissions. We lose 1% of our topsoil every year by intensive agriculture practices. We have to completely change the way we farm, what we farm, where we put it. And there's some incredible companies in this area. More on the non-profit side, I think there's going to be an explosion in basically nature-based solutions. And this is something that we deal with on a more personal basis at a foundation level. But there is going to have to be, to get to net zero, we need a gigantic investment in nature-based solutions, and that's just at the beginning. So those are kind of some of the areas that I'm interested in climate. Healthcare is a big area for us, and it's always been a big area for us because I think anything that makes the world healthier is positive. There's a lot to talk about, but maybe I'll focus on 2 things. One is the move, personalized medicine, genomics. I guess, I'm sure that you've talked about it at the summit here, but there's something incredible has happened in the last couple of years. So we've been able to read the gene sequence through gene sequencing machines, Illumina and others, but we can now write with synthetic biology, and we can edit with CRISPR. So if you can read, write, and edit, the applications are mind-blowing. So from therapeutics to diagnostics to, we met a company the other day that's making leather out of mushrooms, using genetically modified mushrooms. And how cool is that?
Yeah.
The other thing in healthcare that's really interesting is data. Basically, it seems that every other sector in the world has used data, apart from healthcare. You still get the paper scan. You never log into your. It's so. Healthcare is really a data problem, and we're just getting started in using data. So there's a whole lot of investments that are really interesting in that regard. Final one, an area I know that you've been very active in, software. So software is all about doing more with less. It's about dematerializing. So if you take the processes that you can do with software compared to what you can do with people, paper, other processes, it's just incredible. And so we've made a number of investments in this area. A couple of weeks ago, we announced an investment in a company called Octopus Energy. They're a big reseller of energy, of driving clean energy, but they have this incredible asset, which is a software business, which makes basically the productivity of energy generation from renewables to be significantly greater. So there's a great opportunity in software in strange areas like utilities, but also lots of other areas. So that's kind of like a quick fire hose treatment of things that we're looking at.
Yeah, well, you could go on for hours,
yeah,
right?
It's a lot. I could.
And I guess it hasn't changed much from where you started. It's an environment, it's healthcare. It's probably software is more present today, but
Yeah.
they're very big sectors.
Yeah, it's very similar, but there's also, I mean, we invested in areas that I never thought we were going to invest in. So, we invested in the car industry. I always thought the car industry was going to be too tough to invest in, capital-intensive business, but we found some great investments there recently.
Okay.
We recently invested in a company in the fashion and apparel area. I never thought we were going to invest in apparel and fashion, but it's incredible how much the footprint of that industry is. And the company we've invested in, we're working with them to drive kind of circular economy.
Yeah.
So, their concept is that when you get clothes delivered to your house, you can put your used clothes in the same box that you got the delivery from. They wash it, they merchandise it, put it on their website, and they sell it. And that's kind of one of the things they do. But we are very open to new areas, always. But I would say the bulk of it has always been climate, healthcare, software. We've also done a bunch of stuff in financial inclusion. So how to get more people into the financial system. That's something we've been investing in for 15 years, particularly in developing countries.
Yeah, in
so
emerging
things like
countries.
banks in developing countries.
Yeah.
Remittances, things like this.
And so we have a minute and a half left.
God.
So just to finish off, maybe with all the recent boom in ESG and all the talk about greenwashing, what's your take on that?
Yeah, so the industry has boomed. So we moved from 17 years ago, it was, who are these hippies? To now it's 50% of the flows that are going into the stock market are following some kind of ESG mandate. And for sure, there has been some abuse of ESG. To some people, it has been a marketing thing. The fund industry is under pressure. It's under pressure from fees. And ESG is kind of a bit of a lifeline to the industry, so it's been used for that. We speak to people a lot about how to make it good ESG versus bad ESG. I'd say a very quick summary would be that, first of all, it needs to be genuine, so it needs to be core to your mission, not some kind of marketing thing. Second, it needs to be impactful. You need to be investing in companies that are having an impact, which you can measure and report. And then thirdly, you need to drive engagement with the companies. So you need to push whatever companies you own, you need to push them to do better, and you need to set them really specific goals and guidelines. And I think once you do those three things, it doesn't become greenwashing.
Okay, great. Well, perfect, on time. Thank you so much, Miguel, and thank you
Yeah,
everyone for listening.
thank you.
Thank you.